Hey guys, welcome back. Thank you guys so much for subscribing to my YouTube channel. Today I have another topic for us to discuss that will help you in your process for buying life insurance. This topic is highly debated, highly discussed, and what that topic is the term versus permanent life insurance debate. I hear all the time, people will say, hey, term life insurance is a scam because of XYZ, or I wouldn't buy permanent life insurance because it's not worth it because of ABC. So this video will break down some similarities and pros and cons between both of those products. Before I even get into that any deeper, I do want to say, when you are purchasing life insurance, when you are in that process, you really want to deal with the agency or with an agent that can provide both term and permanent life insurance. That way they can break down pros and cons. Preferably, I'd rather you guys deal with me, but if you happen not to, make sure you're dealing with somebody that can provide both term and permanent life insurance, because what you don't want to do is to talk to somebody that cannot provide both. So they're going to be biased with you. They might try to coerce you into buying like a certain product that might not fit you. Life insurance is not one size fits all. Term life insurance is not a scam. Permanent life insurance is not a scam. So starting off with the pros and cons, I do want to start off with term insurance. This is going to be one of the most popular, kinds of policies out there. Now with term, the biggest pro about this kind of insurance is that it's going to be the most affordable kind of insurance. This is the cheapest from my personal experience. And of course, this is going to depend on age, but I have clients that are, late 20s, early 30s that, have $500,000 policies. They're not even paying $40 a month, so I got clients that might have $100,000 policy, probably paying, no more than $15 a month. So those policies are very, very, very cheap. And with the terms, most companies are going to have, between 10-year options and 30-year options. Some companies even provide 40-year terms, and those will be in increments of 5. So you can get a 10-year, a 15, a 20, 25, 30. And what that means is your term will last that long and the price will never, ever increase, right? So with that, another pro about the terms is that some may come with something called guaranteed renewability, meaning that, if you're 25 years old, you get a 20-year term, right? You'll pay the same price until you're age 45. At age 45, if it has guaranteed renewability, the policy will automatically renew. It doesn't matter what your health is. It doesn't, none of that matters. You don't have to apply if you don't want to for more coverage. You don't have to go through any type of medical exams, nothing like that. It'll automatically renew. Now, the caveat to that is that the price does increase, because in that situation, in that example, if they're rating you at age 25 and you get guaranteed renewal at age 45, then they're going to rate you, at age 45. Right. Another good thing about term insurance is that depending on the insurance company, some term policies are convertible to permanent insurance. So like I said earlier, term is going to be cheaper than permanent insurance, but you could start off with a term. Let's say you plan on your income increasing, within a 2-3 year period, and you really need insurance. You might want to go permanent, but it might not be affordable at that time. You can get a term. Right, within a 2-year period, you can convert it to a permanent policy. And some companies really don't require much paperwork. You might not even have to apply again. May not have to do any type of medical exams, anything like that. Right. And then one of the last big pros about term life insurance is that term insurances for most companies will come with living benefits. And I actually discussed a lot of living benefits in another episode, but one thing that I will discuss is the accelerated death benefit rider, which is an additional benefit that comes for terms. And what that means is that if you were to get a terminal, a critical, or maybe even a chronic illness, such as cancer, strokes, heart disease, Alzheimer's, something of a high magnitude, as far as medical conditions go, you can access your death benefit early. So, God forbid anybody that's watching this video, let's say, you get a cancer and the doctors are telling you, hey man, chemotherapy is going to be $50,000. So instead of you having to touch your savings, touch, a 401k or another type of investment, instead of you having to go into medical debt to cover that, you have a life insurance policy that can cover it. So like I said, for example, let's say you're 30, you get a 30-year term. At age 60, it doesn't come with guaranteed renewability. Now you have to go out and reapply, but a lot can happen within 30 years. Your health can change, and in a situation like that, let's say, your health changes, right? Now they accepted you the first time, they might not accept you the second time. And even if it does come with guaranteed renewability, the price can get, crazy. So, for example, if you're 25 and you get $1 million policy where you're paying $50 a month, you're not going to be paying $50 a month once it renews, right? And they rate you up. You could be paying $200 a month, upwards. And what I tell my clients is if they ever select term, their goal should be to have a net worth of whatever is on their policy at least, or more. So if you have a $500,000 policy over a 30-year term, your goal within that 30 years should be, hey, I need to have a $500,000 net worth. That way, when I pass away, or that way when it comes time for me to renew my policy, I can look and say, okay, well, hey, I could renew it if I wanted to, but I have all these assets to where I really don't need life insurance because I've been working so hard over these 30 years that my assets will not only cover my burial, but it's going to make sure my family is taken care of. So before I even get into permanent insurance, pros and cons of that, I do want to say if you are planning on purchasing term life insurance, your goal should be, in whatever term that you get, your net worth should equal whatever the face amount on that policy is by the time that term ends during the first go round. Right. And next, what I'll get into is permanent life insurance. Welcome back. So I will be talking now about the pros and cons of permanent life insurance. Now, before I get into that, I will say that there are multiple kinds of permanent life insurance. The most popular are going to be whole life, of course. You got universal life, index universal life, variable life. You got 20 pay whole life, 15-year pay whole life. There's multiple kinds of policies. And what I suggest, like I said earlier in this video, is that you want to sit with a broker that can provide multiple kinds of policies. That way they can break down and you'll know, okay, hey, this is for me, this is not for me, right? So get into the pros of permanent policies. The biggest pro is that this is a policy that's going to last you your whole life as long as you continue to pay the premiums. So unlike term, where you have to deal with, renewing your term and maybe you have to go apply again, or, you have to deal with the fact that the premium will increase, once the term renews. With permanent life insurance, the premium will always stay the same as long as you keep the policy. It'll never ever change. That's the main pro. Now, another big thing that people talk about when it comes to permanent life insurance is going to be the cash value that is associated with permanent life insurance. And what cash value is basically it's a savings account that is tied to your life insurance policy. Every month that you pay your premiums, or every year that you pay your premiums, some of that money is being invested into a tax advantage account, right? So I just said tax advantage, meaning that Uncle Sam is not going to touch this money. And then when it actually does come to the cash value, now, like I just said, you can take out withdrawals from that. Basically, if you have $10,000 worth of equity in your policy, you can pull that out, or you can take a loan out against your policy. And this is something else that I like, another feature that I like about permanent life insurance. So let's say you have $10,000 in equity in your policy, right? And instead of withdrawing it, you want to take a loan out against it. So when you take out a loan with a permanent life insurance policy, the difference between doing that and doing it at a bank is if you go to the bank, they're going to want to do a credit check. They're going to want a required payback date, and then they're going to charge you high interest. Life insurance, they're not checking any type of credit checks. There are no required payback dates, and the interest is pretty low, usually about 1 or 2%. Now, if you were not to pay the life insurance company back, what they do is they deduct what you borrow plus interest minus your death benefit. So let's say you have a $100,000 policy and it's grown to, $120,000, meaning that you have $20,000 in equity in that policy. Let's say you borrowed $10,000, right, plus interest. Let's say you never pay it back, right? So whenever you pass away, instead of your beneficiaries getting the death benefit, which would have been $100,000 plus a $20,000 in the cash value, they're going to get the $120,000 minus $10,000 plus interest in a death benefit. So like I said, people use these type of policies to invest. You can look at, the owner of JCPenney. You can look at the owners of McDonald's. These are two companies, two startups. Well, at the time they were startups that used permanent life insurance cash value to invest into their companies. Now, and actually, Walt Disney did the same thing when he started up Disney World. Purchased a permanent life insurance policy, invested in it, got his equity up, used that money to, start Disney World. Now everybody wants to go to Disney World and Disneyland and all that good stuff. So, like I said, when it comes to life insurance, it's not one size fits all. Everybody is different. And I'll actually give you guys examples of how I would advise somebody if they came to me for insurance and didn't know where to go. So, for example, my first example, let's say I have a family man, multiple kids, married. He has a lot of responsibility, mortgage, new cars, stuff like that. So if he came to me, he's like, hey, Brandon, what kind of policy should I have for myself? So I would tell him straight up, I'm like, hey, man, you probably want to go with a term policy that's going to give you a lot of coverage, $500,000, preferably a $1 million policy. And I would tell him straight up, hey, man, what your goal should be, what you want to do is that during this term, whether it's a 20 or a 30-year term, I would definitely advise him to get a long-term 20 or 30-year term. And I would advise him to say, hey, you want your net worth to equal this face amount by time it has to renew, because if he gets a $1 million policy, right now he might pay like a little bit less. Let's say he's 30 years old, he'll pay a little bit less than $100 a month. But 30 years from now, he could be paying, maybe even 4 figures for that policy, right? So he wants to make sure his net worth is at least, $500,000, $1 million. That way, when it comes time to renew, he's like, you know what, Brandon, hey, man, thank you so much. I don't even need to renew. My net worth is more than enough to cover a burial. My family will be taken care of because I've already, purchased these assets, so on and so forth, right? So that's how I would advise that. And then in another example, when I would advise somebody to get permanent insurance, let's say I got a young guy, no kids, no family. He plans on having a family, right? He might be in his mid-20s, right? He might be, either making some decent money or he might be making some good money. He's like, hey, Brandon, I've been hearing I need to get some life insurance. What you think I should do? So in that situation, I would show him term as well, but I probably would, have him look more into permanent life insurance, because since he's young, the premiums are going to be cheaper, and then he's going to get, somewhat of a head start, with investing, So, he'll be able to build up equity quickly in that policy. That way, in the future, when he's in his mid-30s, early 40s, he'll be able to use the equity that he has in that policy to invest in, like I said, businesses, real estate, stocks, crypto, whatever it is. So like I said, when it comes to life insurance, it's not one size fits all. Everybody has different needs. Everybody has different wants. And it's my job, to break down the pros and cons and similarities between the two. So I want to thank you guys so much for taking the time to subscribe and to watch this video. In the comments, in the link, I will have a link to my website and also my business number. So if you are in one of our licensed states and you do need a consultation, maybe quoting, maybe you have some questions, regarding life insurance, maybe you need some life insurance. If so, please let us know. Please reach out to us. We would love to help you. And again, I thank you guys so much for taking the time to watch this video. Thank you guys. Have a good night.